It's Saturday, March 7th, 2026, and this is your weekend market recap covering the stock market, cryptocurrencies, precious metals, and the key financial events investors will be watching in the week ahead. Let's start with the big picture from Wall Street this week. Stocks finished the week under pressure as investors continued to digest rising geopolitical tensions, persistent inflation concerns, and uncertainty about the Federal Reserve's path on interest rates. The major U.S. indexes all experienced volatility throughout the week. The Dow Jones Industrial Average saw several sharp swings as energy prices surged and investors rotated away from riskier sectors. The S&P 500 also drifted lower by the end of the week, while the Nasdaq Composite managed to hold up slightly better thanks to continued strength in some large technology companies. The biggest story driving markets right now remains energy and geopolitics. Oil prices surged earlier in the week after tensions in the Middle East escalated, raising concerns about potential disruptions to global oil supply. Higher energy prices are a major concern for investors because they can push inflation higher again, which in turn may force the Federal Reserve to keep interest rates elevated longer than previously expected. That's one of the main reasons we've seen volatility pick up across equities. Bond yields also moved higher this week, reflecting those shifting expectations around interest rates. When yields rise, it tends to put pressure on stocks, particularly growth stocks, because higher borrowing costs make future earnings less valuable when discounted back to today's prices. Now let's turn to cryptocurrencies. Bitcoin has continued to trade in a relatively volatile range, but remains near historically elevated levels. As of this weekend, Bitcoin is trading around the upper $60,000 range. The cryptocurrency market has seen renewed interest from institutional investors following the approval and continued growth of spot Bitcoin exchange traded funds over the past year. Those ETFs have created a steady stream of demand that many analysts believe is helping support prices during periods of market uncertainty. However, Bitcoin has still experienced large intraday swings as traders react to macroeconomic news, Federal Reserve expectations, and global risk sentiment. When stocks weaken sharply, Bitcoin sometimes follows, but at other times it behaves more like a digital hedge asset. Turning to precious metals, gold and silver continue to attract attention from investors, seeking protection against inflation and geopolitical risk. Gold remains near historically strong levels after a powerful run over the past year. Investors often move into gold during periods of uncertainty because it's viewed as a store of value when currencies fluctuate or geopolitical tensions rise. Central banks around the world have also been buying significant amounts of gold in recent years, which has helped support the long term price trend. Silver has also been trading firmly alongside gold. Silver tends to benefit not only from safe haven demand, but also from industrial demand because it's widely used in electronics, solar panels, and emerging technologies. That dual role often causes silver to move more aggressively than gold during strong commodity cycles. Taken together, the continued strength in both gold and silver suggests that investors are still hedging against inflation risks and global uncertainty. Now, looking ahead to the coming week, there are several key economic events that markets will be watching closely. First, investors will continue monitoring developments in global energy markets and the geopolitical situation in the Middle East. Any escalation that threatens oil supply could push crude prices even higher, which would have direct implications for inflation expectations and Federal Reserve policy. Second, economic data will remain a major focus. Inflation indicators and consumer spending data will be closely watched to see whether price pressures are easing or remaining stubbornly high. If inflation continues to run hotter than expected, markets may start pushing back expectations for interest rate cuts even further. Third, investors will be paying attention to commentary from Federal Reserve officials throughout the week. Fed speakers often provide subtle clues about how policymakers are interpreting recent economic data, and those comments can sometimes move markets significantly. Corporate news will also play a role. Several large companies across technology, retail, and energy sectors are expected to release updates or hold investor events in the coming days. Those announcements can shift sentiment within specific sectors and sometimes across the broader market. Finally, traders are beginning to look ahead to the next round of major economic reports later this month, including key inflation and employment data that will help shape the Federal Reserve's next decisions. So, to summarize the week, stocks faced pressure amid rising oil prices and geopolitical uncertainty. Bitcoin continues to trade near the upper $60,000 range with significant volatility, and gold and silver remain strong as investors seek safety during uncertain times. As we head into the new week, markets will remain highly sensitive to inflation data, Federal Reserve signals, and geopolitical developments that could impact energy prices and global economic stability. And as always, volatility often creates both risks and opportunities for investors who are paying close attention. That's your weekend financial market update for March 7th, 2026. If you like this market update, please don't forget to like and subscribe.